All right, guys, so here's a quick trade recap of a trade I took this morning on Australian dollar, US dollar. I executed it on the 1 minute time frame. It's right here, as you can see. I'd like to go through the steps I took to take this trade and what prompted me to have a short bias on this trade to begin with. All right, so let's dive into it. Now, the bias on this pair begins on the 1 hour time frame for me. So in the weekly analysis video, I already went over this, but we had a higher time frame level of supply here. Right, we had a significant supply zone. Price reacted to that strongly. We traded away from it, came back into it, mitigated it some more, and then traded away once again. Now, in the weekly analysis video, I was quite bullish on this pair, but as I've said in the past, I'm not married to any sort of bias. Whatever the market shows me is what I'm going to react to, and a bias can change at any given time, right? So because we traded away from this supply zone once more, creating this break of structure, that's what prompted me to have a short bias instead of a long bias. So, of course, this would be our most recent low, our major low, and price impulsively pushed right through that, creating this break of structure. So that's the basis of this trade, right? We're now seeing bearish order flow, and our bullish order flow was violated. So that being said, let's drop down to the 15-minute time frame. Not too much to go over on the 15-minute, to be honest. Like the main basis of this trade was based on the 1 hour time frame. But let's keep dropping down further. Now, as we go down to lower time frames, you can see there's just multiple breaks of structure, right? So this break of structure occurred, this pullback occurred, creating this break of structure. However, to me, there was no clear entry point here. We didn't even reach these consolidation lows here. So no entry point there for me, but we had a break of structure, which further confirmed the bias. Minor pullback, again, no real clean entry point. Maybe on a 1 minute time frame or a 30-second or 15-second time frame, there would be something here. Not for me though. Again, break of structure, another pullback. Now let's drop down to the 1 minute time frame. That'll give a clearer picture of what I was looking at, because that's the time frame that I executed the trade on. So, okay, where are we? What time was this? All right, so I woke up and got on my charts at about 7:30, so right about here where the vertical cursor is, okay? So at that point, I noticed this supply zone that was well respected, right? We traded into that supply zone and then rejected it strongly. Now that would have presented a pretty clear trading opportunity to me. That was a nice one, right? Because the supply zone was responsible for this break of structure back here, right? We pushed through that structural low, causing the break, pushed through, and then pulled back to mitigate that supply zone. And then we traded right away from it, okay? So this whole move here could have been a very nice trade as well. But that's literally right when I was waking up, so I didn't catch that. However, as you all know, the market is very abundant and provides endless opportunities if we're receptive to them. So as soon as I realized I missed that move, I thought to myself, okay, well, this bearish leg here that just occurred, it broke structure once again, right? Because this was our new structural low, and price clearly broke through that low, okay? So that prompts me to look for the next supply zone, right? Which was right here. Now, instead of getting too specific, I just kind of highlighted this general consolidation area because it would still allow me a comfortable 3-pip stop loss. So I just decided to not get too greedy with it. I just target the entire zone there instead of trying to narrow it down to one specific candle. So I highlighted the whole zone. But then what I like to do is use my Fibonacci tool. And I don't have any numbers or anything on the Fibonacci tool. I literally just use it to see the top, the bottom, and the 50%, right? I often enter at the 50% because it achieves a better entry and a better, a tighter stop loss. So overall, a better risk reward ratio. So that's often what I do. So whenever I'm getting ready to enter a trade, you'll see this right here. So this, from top to bottom, that's the supply zone. But because I was looking to enter, I put the Fibonacci tool here. And as you can see, my entry point on the risk to reward tool over here lines up with the 50%. It's actually just above the 50% because I entered this trade manually. Like I clicked sell on my phone just manually instead of setting a sell limit order. No real reason for that. It's just I guess I was just at my chart, so I didn't feel the need to set an order. I felt the need to just execute it manually because it was right in front of my eyes anyways. I didn't have anything else to do. So yeah, I entered just slightly higher than the 50%. I set a 3 pip stop loss, which as you can see is just set above all these highs and the old supply zone. Not that that really matters, but it was set comfortably above these highs right here. So a 3 pip stop loss, nice and comfortable. And all I did was simply target the most recent low, okay, which was right here. So that, as you can see, that gives me a risk reward ratio of 4.33, okay, risking 3 pips to gain 13 pips. Nothing too major, but I like these little intraday trades because once I'm out and I can just get on with the rest of my day, right? So it's nice. I did anticipate price to go lower than this because we have equal lows here, right? Most would look at this as a double bottom and be buying, aiming for the moon, but that's not how we look at things, right? These equal lows to me represents liquidity in the market because I know there's a lot of stop losses resting below here. So of course, price is going to want to clear that liquidity. So although I was fairly confident that price was going to continue to trade lower, I just wanted to be in and out of the market because I have other things to do today, right? So I just targeted the lows. Those were hit very nicely. The trade was taken out for full take profit. I didn't even take partials just because it was a fairly small trade to begin with. I risked 1% capital. And yeah, it just went straight to take profit basically. Now, as you can see, we had another pullback and price began to trade much lower. So if I were to really have held this to the right to the lowest point, it would have been almost 10% with me risking 1%, right? So that would have been a very significant trade. However, I am more than happy just sniping this profit and just getting out and getting on with the rest of my day. I can go to the gym, I can spend time with my kid, whatever the case may be. So I'm more than happy with that. As far as re-entering, I don't see clear entry opportunities here or here. Like I haven't seen any clear entry opportunities. I am out for the day. Like I'm not getting in on another trade. I only trade from 7 a.m. to 10 a.m. Eastern time. So I'm done for the day. But as you can see, this was the bottom of the new supply zone and price never made it up to that point, right? Even if we were to be really generous and say that that was the bottom of the supply zone, like that, the wick of that small candle there, price still didn't even reach that point. And like I said, I always aim for the 50%. So what I would have done here is had something like that. So my entry would have been right up here. So I actually wouldn't, there was no trade there basically. So it would have been a nice hold if I were in the mood to hold the trade. That would have been nice. Sure, we would have experienced a big pullback. You would have watched the profits kind of disappear for a bit. But overall, the bias remained the same, and we traded much lower than that. So, yeah, there you have it. And here as well, we had a very refined zone of supply right there. That very small candle right there, that indecisional candle, which was responsible for the minor break of structure and ultimately the actual break of structure, right? But again, no real entry there. Price didn't even tap into the bottom of that supply, let alone the 50% where I look for, right? So the main two entries were this one obviously that I took and this move here that reacted to the initial supply here, okay? So those were the two moves today as far as I can see. Now, again, if I held it, that would have been great, but I wasn't in the mood to do that. I just wanted to get out of the market, and I was very comfortable doing so. So I hope that explained my process a little bit for you guys. I know some people are intimidated by trading on the 1 minute time frame, but as you can see, it's based on the higher time frames. Like my bias was based on the 1 hour time frame, and it's all the same thing. It's just very fractal, right? What I was looking for on the 1 hour time frame, it's the exact same things I'm looking for on the 15 minute and the 5 minute and the 1 minute. It's just a little more zoomed in. I'm looking for momentum to break structure, and then I'm looking for a retracement back to the supply zone that like the point of origin that created that momentum and break of structure. It's as simple as that. So we see a break of structure, I look for the pullback into my refined supply zone. That's where I go short. Okay, so very simple. If you guys are having a hard time like grasping this concept, just watch over the videos, because these are things I've explained in the videos already, and we're just getting started with the course really, so there's a lot more to go. Yeah, I hope this cleared things up a bit for the trade I took this morning on Aussie dollar for 4.33R.